And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary Kay, who's out today. Today is Monday, April 6, 2026. We have a great show for you tonight. As always, we want to thank you very much for being here. Before I dive into the show, I have some notes from Gary, which I'll cover, but also some housekeeping notes to cover. As you know, this is a show about you and your money and all the fun points in between. We try to keep the fun and informative as possible and give you the facts, and as always, you decide. Just as a quick reminder, if you don't get the show in your city, you can go to GaryK.com. If I tend to speak fast, I will do my best to slow it down, but you can listen live or archive. You can rewind anything I say on any device you want for free, all on GaryK.com. Also on GaryK.com, you can follow Gary just on X just by pressing the button. His handle is his name, and then his handle, Gary Kaltbaum. And you can also subscribe to Gary's morning notes sent directly to your inbox for free. You may email Gary, ask about his money management services, or check out anything else that he posts on GaryK.com. If you want his premium service, you can subscribe on ConvictionLeaders.com. Now, once again, we're in a situation here. Let's see, those are all the big headlines. But right now, we're in a situation where the market is very news-driven. We have a week ahead coming up. I have notes from Gary that I do want to share. I'm going to go ahead and read those right to you right now so you don't miss anything right at the top of the show. So let me go ahead and jump in. First, Gary says, I gave out my final four basketball picks. We went one-on-one. We went 1-1, so let them know. Let's see, my pick to win it all is still Michigan, and we like Michigan to win the game, but we are not sure of the line, so we're just going with Michigan to win the game tonight. All right, let's see here. We can start off by saying the artificial intelligence, AI groups, are again leading in fiber optics, data storage, memory, and some of the other semiconductors. We have news, which a lot of it is noisy. We've got that 48-hour deadline from Trump. We have a big week of inflation, which I'll get to later and cover the week ahead in more detail. But more notes from Gary. We've had a little counter trend rally off of the lows, and we're very extended to the downside on the near-term basis. The longer oil stays up, the tougher for the economy and the market. As far as the market, unfortunately, we think it's all about decisions being made from the heads of these two countries, and the longer it lasts, he says, the rougher it can be. We don't think the president would dare to do ground assault. Then again, who knows? Let's see here. One would think a ceasefire should be an outcome soon because it benefits both parties, but I would have thought that 2 weeks ago. And let's see, what else does Gary want to share? Yeah, that's pretty much it for right now. Actually, no, that is it. Those are all the notes he sent me. So, okay, the market. We have a situation where we have a busy week coming up. Today's Monday, the beginning of the week. I always like to look ahead and plan and say, okay, what's coming up this week? Look at the calendar, and both the economic calendar and earnings calendar. A few things to keep in mind. Number one, it is the beginning of the second quarter. And what happens at the beginning of every quarter? We have earnings season. That's what's coming up right around the corner. We also have a lot of news, interestingly enough. We had the war, obviously the 48-hour warning Trump gave to Iran over the weekend, and some economic data, some inflation data coming out later this week. We have a few companies that are reporting earnings on Tuesday. We have, Levi's is reporting earnings, Delta, Constellation Brands, Applied Digital on Wednesday. So Delta, Constellation, and Applied Digital on Wednesday. Thursday, BlackBerry's reporting earnings. They're still around. And then Friday is going to be a major inflation day. We have CPI inflation, Michigan inflation expectations, and then Michigan consumer sentiment all on Friday. Thursday is a heavy data day as well. There's a PCE inflation, which is part of the Q4 2025 GDP. The third estimate will be released there as well. And then in the GDP report, there's an inflation report. So we'll see that Thursday morning. Wednesday, we have the Fed minutes. And then Tuesday, we have durable goods. And, of course, the 48-hour deadline. We'll see what happens there. And that's more or less the big news coming up this week, which hasn't happened today. There's an ISM service, or non-manufacturing index, and that's really it. As far as big, heavy earnings, they're going to start next week or the week after, like over the next several weeks. But this week we have a sprinkle. A few big companies are reporting that I just mentioned, but for the most part, the real things that we're going to watch are the geopolitical situation, escalation potential risk if there isn't a serious fire, or a ceasefire. So one of two ways, or they kick the can and it keeps going like it's been going. We'll see how this unfolds. Oil prices is something that I'm watching. As Gary mentioned, high oil prices are a negative. They serve as an indirect tax on both consumers and businesses. What I mean by that is all of us need energy prices. We all consume energy or pay for energy in some way, shape, or form. Most of us at the gas at the pump, and that's the easiest way for people to relate to this situation of higher or indirect tax. When you go spend $4 or $5 and possibly more a gallon for gas, the cost goes up significantly. 6-7 weeks ago, before the war started, gas was what, $3 and change a barrel? Sorry, a gallon, not a barrel. Oil was $60 a barrel. Gas at the pump was $3.30, 50 cents, depending where you live. Now it's way higher. So nothing changed in my income, but what happened to my expenses? My expenses went up. So that's what I mean by an indirect tax. And of course, tax day is coming up on the 15th of April. And that's why tax is front of my mind. I just spoke with my accountant earlier today, so that's why I say energy prices are an indirect tax on both consumers and businesses. Same thing for businesses too, by the way. It's not like they're making a lot more money; it's just their costs go up, especially aviation. We'll see from Delta, but jet stocks. I mean, the jet fuel is extremely expensive, so on and so forth. So that's why energy prices going up too high, too much, too fast. That could be a trigger to. That's what Gary means by it's not good for the economy. A trigger for something that could slow things down a little bit or a lot, depending on how high oil prices go and how long they stay high. Remember, back in 2008, folks, oil hit 150, 149, 47, something like that, right below 150 a barrel. Not a gallon, but a barrel. Right? Gasoline is priced in gallons and oil's in barrels. So it was right below 150, and then you had the '08 meltdown, so on and so forth. Now, the $150 for oil didn't cause the '08 meltdown directly, but did it exasperate? Did it help, accelerate or fuel? Pardon my pun here with the word fuel. Did it add fuel to the economic fire, so to speak? Yes, it sure did. Right? So paying attention to energy prices, oil specifically, and gasoline prices as well, matters. Because what happens to consumers' discretionary income? Goes up or down? Well, it goes down. They have less money to spend on goods and services in the economy because they're spending that money on oil or energy prices or gas prices, whatever. So consumer spending makes up approximately 2/3 of the economy, last I checked. The American consumer is the driver, is the engine of our economy. And if the consumer has to spend more money for energy, then they have less money to spend on other things. What happens to profits for other companies? They go up or down. They go down. And then if earnings go down, or profits or earnings, if earnings go down, all things being equal, is that bueno or no bueno for the stock market? It's no bueno. And that's more or less the logic, right? The stock market's a mirror of the economy and vice versa. One leads, the other lags. They both lead. However you want to dice it and cut it, it's a very simple equation, right? You have more money to spend, all things being equal for the American consumer, the economy is going to grow. They have less money to spend because they're spending it on high energy prices, no bueno. So not the best thing, let's put it that way. All right, so that's the clear correlation there. It's something that I'm watching because higher energy, I remember 2008 very well. And I go to, I pay for gas like everybody else. So it's definitely something that I want to make sure everybody's front and center on, and something that really matters. It's not so much the news. As Gary's mentioned, I cover this a lot in my work as well. It's the reaction to the news. That, folks, is really, really what's front and center. Well, and also the market's a forward-looking mechanism. So lots of times I get asked this question, hey, Adam, but this event just happened. Why is the market going down? It should be going up. Lots of times you get the market, because it's forward-looking, you get to buy the rumor and sell the news. I mean, the market moves up on the rumor that X event will happen, whatever that event is. And then the event actually happens. We've had already a big move up or down. And then, in this case, by the rumor, it would go up. And then when the news event actually happens, you sell the actual news, and then it goes down. But everybody's looking at the news and saying, oh, okay, that event just happened. Let's buy it. But the market actually reacts and goes negative, and then they don't understand. That's a disconnect. The market's a forward-looking mechanism. Lots of times, whenever possible, it discounts news. Now, when you get major news that changes, the markets react very, very fast. It's very difficult to discount an end to a potential war like this. Nobody, quote unquote, knows with absolute certainty. But when the events actually happen, and there's hints of, a ceasefire most likely can happen, I always pay attention to how the market reacts to the news. Because that's what shows up on our statements. Not the news, not the earnings, nothing else. It's the reaction to the news, price. Up next, we've got a lot more to cover. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, I want to thank you very much for being here. You can go to GaryK.com, rewind, fast forward, listen or re-listen to any part for free on any device 24/7. All of that's available on GaryK.com. And again, if you want Gary's premium service, you can go to convictionleaders.com and take a trial there. All right, so a few things that keep in mind here for today. A lot of the notes I read earlier from Gary, but I'd like to go a little bit further here and just put some pieces of the puzzle together. So this week we have the 48-hour deadline or the warning. That's front and center. After we get through that, we've got the Fed minutes from the last meeting on Wednesday. And then we have inflation data and GDP in the latter half of the week. Remember, the Fed has a dual mandate. Number one, keep the unemployment rate low, so make sure people have jobs. And then number two, keep inflation around 2%. Well, what happens to oil prices when they shoot higher? There's an inflation shock. The economy depends on how long it stays up there, but inflation goes up. I mean, that's just the bottom line. Now, we heard Powell say recently, it's not a big deal because it's a temporary shock. Once the war's over, oil price will go back down. Okay, great. How long until oil prices go back down? We don't know. And if they go back down, are they going to go all the way back down to where it was before the war? Down to $60 or 50 or 65 or 70? Or is it going to go from maybe 110 or 112 down to like 90? But still be way above 60 where it was before the war started? We don't know. So inflation matters because it directly impacts the Fed, Fed policy. Trump's made it very clear he wants the Fed to cut rates and cut rates aggressively. Okay, that's one. Two, we have a situation where if inflation goes up and stays up, in other words, it's been going down now for a while, but if it starts going up here, the Fed might not be able to cut rates, and in fact, they might have to raise rates. We don't know. A lot of it depends on demand, right? The economy, it's supply and demand. That's the Economics 101 teaches us basic price is a function of supply and demand. All things being equal, supply stays the same. Demand is going to go up. It's going to impact price. In this case, supply went down for oil. Demand really hasn't changed yet. And supply goes way down. What happens to price? Price goes up. And that's all that happened here. That's why Trump wants that Strait of Hormuz opened up, because it's going to help supply go back to normal levels. And then it'll bring prices down. So, and then if that shock stays too long, then you get sticky inflation and then demand destruction, because like I said earlier in the show, that it's high energy prices serve as an indirect tax on consumers and business, so on and so. And that's where that negative spiral comes into play of demand destruction and weaker economic activity, which hurts profits and earnings, which potentially can hurt the market. But we're nowhere near any of that type of stuff just yet. Just something I'm watching, because if inflation comes in very high this week, and again, the reaction to the news is what matters, folks. Once I understood that, the market's forward-looking, but economic and earnings data, by definition, it's a rear-view mirror phenomenon. My whole world changed. It was like a big collective sigh of relief. Not collective, but all these years. That's why I'm saying collective, because for my back in the late 90s and early 2000s when I first started, I was like, I just didn't understand. And it was so frustrating. And every quarter, every year, same thing. Economic data would come out and market would do the X or Y or whatever. And I'm like, what doesn't make sense? The economic data tells us what happened in the past. Earnings data tells us what happened in the past. Markets looking forward. It's like driving a car only looking in your rearview mirror. You can't do it. Maybe you leave your driveway that way, but you can't drive on the highway looking only in the rearview mirror. And that was the big thing. Whoa, wow. okay, the market's a forward-looking mechanism and it discounts future cash flow, future earnings, so on and so forth. So for the most part. Now, of course, things change. In a highly volatile situation like the war in Iran, things can change very quickly. But the price of oil is something that I'm watching very closely, because if it stays high, even if there's a ceasefire, if it stays stubbornly high, that could have adverse effects on both Main Street, which is the economy, and Wall Street, which is the stock market. So again, putting all that together, we have a lot of data coming out this week. I want to make sense of the data, interpret the data, see how it's going to impact us. How is it going to impact the Fed? How is it going to impact our wallets? How is it going to impact the economy? What is the Fed looking at? All the noise, it doesn't matter. All the noise doesn't matter. All that matters is, what is the Fed going to do? And for now, we don't know, but that's how we interpret the data, and we make sense of it, and just one step at a time. Elon Musk and Steve Jobs, they all have there's a great line out there, and you can Google this, signal versus noise. Most everything in life, it's just noise. It doesn't directly impact the bottom line. It's just noise. Signals actually matter. So that was the difference between, when you look at data, most of the data is just noise. It's not really relevant. Some of it is relevant, and it impacts the bottom line. We call that, they call it signals. So signal versus noise. And then it's very prevalent in the stock market. It's very prevalent throughout life. It's very prevalent in business. A lot of the young people that come work with me, like, oh yeah, we've got X amount of likes. By the end of the month, like, oh, pay me in dollars. I'm like, well, what got done this month? Oh, well, we had X amount of likes. You want to get paid in likes? You want to pay your rent in likes? No. Therefore, measure signals. Likes is good. Sure, it's good to get views on a YouTube video or whatever the case is, but you want money. So let's focus on the signals, right? And that's a big eye-opener for a lot of the younger folks. It's even for older folks. It's just focus on signals. Signals move the needle. Whatever needle you're trying to move. If your goal is to get likes and views, great. Measure that. That's a signal. Great. Maybe you can measure how the return. I heard a really good line the other day on my Smart Money Circles podcast, where I interview the smart money for timeless advice money managers. We just passed $1 trillion in AUM, and CEOs of publicly traded companies. You can listen to anything, YouTube or Spotify, wherever you want. Just type in Smart Money Circle, or go to smartmoneycircle.com. You can see it. And the guy goes, Adam, in addition to measuring ROI, return on investment, I measure ROB, return on behavior. Because actions, find those signals, right, really matter. If I want to get a six-pack, I got to do sit-ups. I can clap my hands all day long. If I'm not getting an ROB, if I'm not getting a return on that behavior, clapping my hands, then stop doing that. And don't confuse activity for productivity. So powerful. So incredibly powerful. Another good line that came to me just recently was, don't confuse effort for success. You want sit-ups, do the sit-ups. If you're clapping your hands all day long, that's just noise. But there's a lot of activity. But if it's not giving you the results you want, differentiate between the noise and the signal. Same thing in the market. Same thing with buying and selling stocks and risk and all that fun stuff. Hope this was helpful. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us and missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen at your convenience 24/7, all for free on GaryK.com. All right, a few things. Let's take a look. The market. We had an update today. The NASDAQ closed up 117 points to 21,996. The S&P 500 closed up 29 points to 6611. And then the Dow was up 165 points to 46,669. The Russell closed up 12 points to 2,542. So putting things together, and I always like to say the market is speaking. Ask, are you listening? And it's really powerful, simplifying things. I'm a big fan. The military has something called KISS, keep it simple, the last S. I'll leave off that word. You can guess what it stands for. Or you can just Google it if you don't already know. You probably already know. But from my standpoint, from where I sit, it's really important to separate the signals from the noise. I built a tool. It's my tool. It's called marketterminal.com. You're all welcome to try it out and use it. If you like it, stay with it. You don't like it, that's fine. Big Wall Street uses terminals to win. There's lots of different terminals out there, but there wasn't one that's A, low cost, B, very effective in finding signals. A lot of them were very expensive, $30,000 a year, and just crazy numbers. I'm like, no, thank you. I want to build a modern terminal for all of us to use and really democratize financial intelligence. And that's the high level fancy schmancy way of saying, hey, you've got a terminal that you use. It basically gives you signals and filters out a lot of the noise. And a lot of what I do, folks, is I want to focus on signals. It's when the price, remember, focus on price. When you can do that, that's a signal. Just about everything else, and I'm saying that in air quotes, just about, takes a back seat. For me, and this is just my humble opinion, take it or leave it, do whatever you want with it. I'm just here to help and share what I've learned over the last few decades to help accelerate your process and your journey and you getting to where you want to go. Price is primary. Everything else, in my opinion, is secondary. So with Market Terminal, we have a first section. You go to breakouts, and you can see every day, folks, the stocks that are breaking out in real time. We use AI and algorithms and all this stuff in the background. It doesn't matter. All that matters is I go to the page, and right away, it shows me stocks that are breaking out. Now, these are not buy and sell recommendations. They're not anything along those lines. No earnings claims are being made, and so on and so forth. All these are just stocks that are moving above resistance. It's just that simple. And the concept of support and resistance, if you're not familiar, is extremely powerful. If a stock is trading between 50 and 55 for 6 months, every time it gets near 55, it falls down to 50, and then it bounces, goes back to 55, so on and so forth. 55 would be resistance, and 50 would be support in this hypothetical situation, or this example. And it could do that for 6 months, 3 months, 3 weeks, 6 years. I mean, bases come in all different shapes and sizes. But the concept, remember, this is more of a art than an exact science. I don't mean it goes to 55 to the penny. No, it goes to around 55. But it just can't break through it, right? And it goes to around 50. Just can't break down below it. The second you get a move above 55, that's called a breakout. That's a signal to me. Doesn't mean I have to take every signal, but that's important because something changed between the balance of buyers and sellers, people buying the stock and selling the stock. Something changed to cause the stock to break out of its base. Now, in this hypothetical example, if the stock is at 55 or 52, in order for it to, let's 50 even, it doesn't matter, it's anywhere with a 50 handle, in order for it to go to 500, what has to happen? It has to break out above 55 first. So it could spend 3 months, 6 months, 3 years between 50 and 55 or whatever the, moving sideways in a sideways base. And bases come in all different shapes and sizes. I'm just keeping it super simple for the illustration here. And then if it's going to double, it has to, by default, or by the way the market works, it's not me making these rules, I'm just playing by the rules, has to break out above resistance. That's the power of a breakout. Now, not all breakouts lead to the stock doubling and tripling and quadrupling. I wish it was that simple. It's not. In fact, most breakouts fail, and that's okay, providing there's risk management in place. So I want to always keep my losses as small as possible. And when I'm right, let my winners run. Just listen to the market and do more of what's working and less of what's not. A breakdown is the exact opposite. If it breaks down below 50, below support in that hypothetical example, then something has changed. Remember, it's all about pattern recognition. And then pattern utilization. We want to recognize patterns, and then we want to use the patterns. That's it. I have no idea where the market's going to be in a year from now, 5 years from now. I go on TV sometimes and talk to media every once in a while, and a reporter asks me, or the guy saying, well, what do you think is going to happen in 12 months? No idea. Like Gary says, I don't even know I'm eating for dinner tonight, let alone where the market's going to be in 6 years or 5 years or 10. No idea. The good news is I don't have to. The future, by definition, is unknown. So the idea here is to say, okay, let me stay in the moment, stay in the now. If I can be aligned and harmony, it's my play on the word harmony, in harmony with the market, then okay, I can stack the probability, the odds of success in my favor. And if I keep doing that over and over and over again, I can get way ahead. So in Market Terminal, right away, you click on breakouts, you can see all the stocks breaking out on any given day, and it updates in real time. Then there's a setups tab. So you can see stocks setting up to break out where they haven't broken out yet. Okay, I want to have a watch list. You can make watch lists, right? I have, there's a large cap setup section on the website. You can see, oh, there's some stocks setting up to break out where they're below resistance. One of them just recently, let's see, let me find a good one for you here, that's setting up to break out, or just setting up, not necessarily to break out, just setting up. Merck, MRK, Merck Pharmaceuticals, setting up to break out. It's trading below resistance, right? Let's see here. If and when it breaks out, any of these stocks that are setting up to break out, oh, okay, then something is going to have changed. Now, all of a sudden, at that breakout point, I'm going to be prepared because I can see it coming up the right side of the base or getting ready, see it setting up before it breaks out. And this gives me an edge. It helps me filter out the noise because there's 10,000 stocks out there and ETFs and all these different things. It's just too much. Okay, what's setting up right now? What are the highest probability trades? I want to see stocks that are leading, that are outperforming the market. The market right now, TJX is another one that's setting up, TJ Maxx. The NASDAQ 100 is below the 200-day moving average. The S&P 500 is below its 200-day moving average. If you look at a stock like TJX, it's literally right near a all-time high. Let me double check that. I know it's a 52-week. Yeah, an all-time high. And it's just been exceptionally strong. It's above its 50-day. It's above its 21-day, way above its 200-day. That is a great example of a stock that exhibits very strong relative strength, or we call it current strength, which is a modified and more updated version of relative strength. Something like that is just perched right below resistance, in TJX's example or Merck's example, they're outperforming the market this year. That tells me, hey, this is a leading stock, or is setting up, has the potential to become a leading stock. SanDisk, SNDK, one of the strongest stocks in the S&P 500, I believe it's in the S&P, one of the strongest stocks in the market, period, is up, I think, over 150% this year alone, while the market's down this year. I think the S&P's down, let's see what, about 3% this year, 3.5%, somewhere in that range. The NASDAQ 100's down about 4% this year, thereabouts. SanDisk is up triple digits. Okay, that's a leading stock. And it's setting up to break out again, perched below resistance. Okay, just broke out about 2-3 weeks ago and then pulled back a little bit and bounced again. Great way of focusing on signals, not the noise. There's a lot more to Market Terminal. Go feel free if you want to try it out. By all means, you like it, great. You don't like it, great. Again, I built something. It took me years to build it. And a lot of input from a lot of really smart folks. There's AI built into it, and there's just see the market. You have a quote panel, and you can see things moving in real time. And extended hours. We're entering earnings season. You can see stocks up and down before the open or after the close, so on and so forth. You want to research this stuff, you can look on the right-hand side. There's a How It Works video on the very bottom of the page. You can watch it for free, how it works. But the idea, folks, whatever tools you want to use to find signals and filter out the noise, strongly recommend focusing on the signals. And price, to me, is the ultimate signal because that's what shows up in our statements. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary Kay, who's out today. In case you're just joining us, we spent some time speaking about the week ahead, what to expect this week, or what are some things on the horizon. We have the deadline. We have inflation data. We're going to have a few earnings coming out, but not a lot. The bulk of earnings will happen over the next several weeks and or month and change, or 5-6 weeks from now. This week we have a few earnings coming out, but then next week more, and then the next week after that, more and more and more and more. But again, it's the beginning of the second quarter here, and at the beginning of every quarter, what happens? We have earnings. So earnings are going to be important. Maybe not as important as some of the headlines, but they're still going to be important. So for me, when you digest all of the news that's coming out, remember, there's a lot of noise out there. I spend a lot of time talking about signals versus noise. Signals matters, noise not as much. It's really important to decipher between the signals and the noise and focus on the signals and try to just, eliminate the noise or reduce the noise as much as possible. And Gary does a phenomenal job of doing that for you every day. I mean, he really, really does. Hats off to him. Every single day for decades, he's on the show talking about the market. It's not an easy feat. Tremendous amount of respect for the man who comes out every day, hears and boom, 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 moves forward. And when he's wrong, says it. When he's right, says it. Just great, great. Hats off to him. So whatever tools I'm not a handy person. I'll tell you a story here. Over the weekend, I had to fix something in the house, and I'm not handy. I'm lucky if I can tie my shoes, let alone, get a drill and a hammer and all this kind of fun stuff. So I was trying to do something. My wife's an engineer, and she's a lot more handy than I am, especially when it comes to simple tasks, because her brain is structured that way. She understands how things function and work. And again, I'm lucky if I could tie my shoes. And we had to do something, and I was using the wrong tool, and I wasn't getting the results I wanted. By the way, I was taking training wheels off a bicycle for my kid to learn how to ride a bike without training wheels. It's nothing complicated. And I'm sitting there trying to take a wrench and a screwdriver, whatever I was doing, I was using the wrong tool to take the training wheels off the bicycle. And I got frustrated because I'm using the wrong tool and it wasn't getting the results I wanted. And it was hot and I was outside and I was just like, okay, this isn't working. She came out, pulled out the right tool, and in 10 seconds unscrewed the bolt, took the training wheel off, and that was that. What was the difference here? It took me about 25 minutes, 30 minutes before I got frustrated enough to say, okay, I don't know what I'm doing here. I need to stop. This is not a good ROI or ROB, by the way, return on behavior. Return on investment is ROI. Return on behavior, ROB, is make sure my behaviors, my actions are aligned with my desired outcome. Whatever I'm doing, it's not working. Think of a cartoon character, just like a Looney Tunes character. It's not working, right? She came out. What happened? I was using the wrong tool. It wouldn't grab onto the bolt and the nut or whatever it's called, and it wouldn't turn. Okay, so she came out, used the right tool, and right away got the result she wanted, and we were done. The whole thing took her about maybe a minute, 30 seconds to a minute. Great. Great ROI, great ROB. Go and ask for help. I don't know what I'm doing. By all means, do it. Using the right tools is extremely important in life. And this just happened to me, so it's top of mind, and it's front and center in my mind's eye. And with the market, same thing. Any tools that you want to use, I strongly recommend that you say, okay, great, is this working for me? Anything in life, not just in the market, but there's tools out there that can help. I could have taken my hand and tried to turn that bolt as hard as I could and blah, 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 and just done it myself. Or get the right tool and boom, boom, you're done. So whatever tools you're using, it's really powerful, really, really powerful to make sure your tools are giving you the results you want. This way your ROB is aligned with your desired outcomes in life. For me, really, really important. Because I want to work smarter. Buffett has a great line. Nobody gets paid extra money for working super, super hard. In fact, some people that work really hard doing heavy labor tasks are getting paid a low amount of money. And the people that, quote unquote, are working less hard, they don't use physical labor, they get paid a lot more money. Okay, I want to work in that camp, the second half, that work smarter. Also work harder, but work smarter. I get a better ROI and a better ROB, return on my behavior. Super important. So as you go through and you have a system, if not, I strongly recommend creating one for how you can go through and look at the market and differentiate the noise from the signals. I know, for example, I like buying stocks that have strong relative strength, have strong current strength. They're leading the market. I'm not going to waste time looking at stocks making new 52-week lows for me to step in and buy. It's just not part of the way that I do business. Nothing's wrong with it. And a lot of people make a lot of money doing that. It's just not for me. So I'm not going to waste time looking at those. So I have scanners and I have screeners. And it's all a market terminal, by the way, that I use. And it just, that works for me. So, okay, in one click of a mouse, I can see, not even click, it just, that's a click of the mouse to pull up the screen that I want. I can see exactly what I want in real time. And it updates in real time. Extremely powerful for me. Whatever tools you use, I strongly recommend to make sure you're honest about it, intellectually honest, and make sure they're aligned with giving you the results that you want. Super, super important. I have a coaching program on findleadingstocks.com where I coach people and help them. And the first question I ask is, okay, what's your system? What are you doing to make sense of the market? And most people just wing it. How do you go through and scan for stocks that meet your criteria? What criteria are you talking about? Have you stopped and looked at your last 10 trades or your last 30 trades? Remember, we're creatures of habits, all of us humans. What are your habits? Carl Jung, a great psychiatrist you work with, Freud had a great line. He goes, until you make the unconscious conscious, you're going to keep doing it and calling it fate and repeating it over and over and over again. It's not fate. They're your habits. We all have W habits, like the young kids say, winning habits, and then L habits, losing habits. What are my habits? What are my patterns? Just look at your actions. Your actions speak louder than words. Print out the last 10 trades or 30 trades and let me find some patterns. How can I improve? What action can I take to improve? Super, I hope this helped. I mean, this changed my life. Super helpful stuff if you take the time to do it. I believe that's all the time that we have for today, folks. This was absolutely fantastic. It's always a pleasure to be here. Thank you, everybody, for listening. This is the one and only Investor's Edge.